Welcome back to Market on Close. S&P 500 pushing lower, and the NASDAQ getting hurt as well, with Amazon down almost 6%. Scott Bauer, the CEO of Prosper Trading Academy, is with us, though, to talk. We're talking stocks today, Scott. Let's put the crypto stuff on hold. So, what to
Why,
you?
something going on?
Yeah, let's talk. Scott, was there a catalyst? What my goal here is to try and figure out if there was anything specifically today that was, you know, the springboard for this, or the match that kind of lit the fire.
Well, we definitely had another tweet that kind of seemed to be at the beginning of the big move down. You know, I was talking to some people at the time that came out, and all of a sudden we all looked around, we're like, what just happened? And that was really the only thing at the time that we saw. And then from that point forward, it almost seemed, Oliver, you know, from a trader's perspective, that it was that herd mentality, like, uh-oh, day off tomorrow, got to get out of what we can right now. So two things happened. You know, what were the two easiest things that happen? One, you just sell every equity you can, and two, you start buying the safe haven, you start buying the bonds, start buying treasuries, and that's what's driving the yield down right now. So I know Tom was just on with you, and he said, you know, we got a day off tomorrow, maybe, you know, there's something that's going to come out, and I kind of agree with him, because you guys made a really good point that if this was any other day without a no trade day tomorrow, we would see the VIX trading much higher. We would see it trading mid 20s, maybe even higher than that. So I think there are some people out there that are still holding out hope that maybe, you know, either the president's going to come out and say, well, you know, I didn't really mean to tweet what I tweeted, or something to that effect. But today was really a herd mentality type of trade.
So, Scott, this is what actually, to be honest, our worlds of the fun stuff we like to talk about on the speculative side with the crypto. To me, you know, I was talking last night, and there's been basically this kind of logical argument that I think is very sound, which is that some of the more you know, frothy stuff in this market has basically happened this year, all the way from the crypto to the cannabis to moves like AMD. There's tons of companies, Funko's another one, that had these exponential moves. One could argue that companies like Amazon had the same thing over a long-term horizon. Companies like Netflix did within the first quarter alone. So if the market did indeed trade in a highly speculative manner, think about it like as a, you know, a fraction of the crypto speculation, these moves almost are not surprising, because if people don't know why they own an AMD, or they forgot why they bought Netflix up at 300 plus bucks, then when people start leaving, they go, oh crap, I got to leave too.
You know, this is unbelievable, because you and I have talked about this so much this year.
Exactly.
I'm telling you, 10 years, 5 years, 10 years from now, we are going to be looking back, and students are actually going to be studying the financial markets of what happened in 2018.
I completely agree.
It really was a year unlike any other, in the sense, like you just said, complete aberrations throughout the year. Didn't follow any sort of patterns.
Yep.
And I think it's going to be a great case study. Now, that being said, what's happening next? You know, we are at the whim right now of such risk headline. Throw out what may be happening with the economy. Throw out the fact that the Fed is going to raise rates at the next meeting in the next couple weeks. We are at the whim of risk headline right now. And everybody, every trader, every retail trader, every money manager right now just has their finger on a button waiting for what that next move is going to be. And that's not how markets really work. That is psychological trading. That is overreaction. And I think there's a lot to be said for that, and a lot to take advantage of, quite frankly.
You know, Scott, you literally just wrote my next post for me, because I've been thinking about this the past 2 days, and I know we like to joke about it, and it's fun, okay? The crypto stuff was fun. The pot stocks are fun. And people were laughing in January when I brought up this idea, basically, and you and I were talking about it as somewhat of a sort of indicator, not that there's any real correlation mathematically or quantitatively, or that because the crypto stuff crashed that stocks can't keep going on. They're two totally separate things. But symbolically, there's just too many examples to say that it's like any other year, all right? A really smart guy, Pravit Chitawangvanich, and I were talking on Twitter last night, who's at Wells Fargo now, and he said, look, we've had moments like this before where people said the same thing, you know, 2014, 15. I don't know. The exponential moves in companies, at least as far as I've been writing about companies the past 7 years, I've never seen anything like it. And the fact that now this type of speculative just whiplash grips markets, how can that be a coincidence?
It's not, and we've had this type of scenario before, but very isolated. You had one-offs. Maybe you had an event or two a year that spooked or spiked the market, as we've seen this year, but this has been continual, and it's not going away anytime soon. And I think a lot of that has to do with A, the size of the market and ETFs that are out there, and B, computerized trading algorithms, because they move markets so quickly at literally the touch of a button when something comes out right now, and everything is just based off of risk headline right now. So you get these just massive moves like we haven't seen really before.
Yeah. So all right, let's try and make sense of this, because our audience, Scott, better than anybody else. It's people who are trying to look at this and they're going, what do I do? How do you approach this market from a measured standpoint, given the whiplash of sentiment that we've been talking about, to make sure you don't lose your hat?
That's a great question. And what you do, Oliver, and it's real hard to remove as a trader or even as just, the retail guy. It's hard to remove emotion out of it, but you have to do it. If you let your emotion dictate the way you trade, you will not be trading very long. So what do? You sit back, you look at what the fundamentals, not only of the economy are, but of the marketplace. And you don't think about what is going to happen tomorrow or even what's going to happen next week, but what is the longer range plan, 3 months, 6 months, a year, so on and so forth. And that is how you need to trade this market, because unless you are an active day trader, in and out and in and out, this volatility is made for that kind of person. And if you're not up for that, you're going to get hurt real quickly.
Here's my hard question to you, Scott, because you're the options guy, okay? You have a pop in VIX. Tom White was making the case the VIX should be higher. It's easy on days like today to go, it's too expensive to now start hedging. It's too expensive to do this and that. Do you basically look and go, maybe I actually do need to think about hedging, think about taking off some risk exposure, even though we're selling off, even though VIX is popping?
So truth be told, Oliver, I actually am selling some volatility in the VIX on both sides.
Really?
Not selling the VIX per se, but I'm selling volatility in the VIX, because over the next 2 weeks, I think it's got to come in. If it doesn't, I'll adjust it, but I think it's got to come in. I'm not predicting one way or the other what we're going. I'm selling it on both sides here, and I'm just playing, again, I'm looking at maybe longer term trends. I'm trying to remove that emotion of what is happening in the market right today and think about this sensibly. Now, as a trader, as a day trader, yes, I have the opportunity to be in there and to manage my position and to manipulate it if something goes wrong. And I'm certainly not going to do it with unidentified risk. Everything I do is risk defined. But this, to me, is an opportunity to sell a little volatility here. It really is.
All right, there we go. Mr. Scott Bauer, I love it. I feel like I got to do some push-ups after that hit. Scott, good stuff. Appreciate it. CEO, Prosper Trading Academy. One for the books, according to Mr. Bauer. I agree. We'll be right back.
Yes.